Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to today's episode of Decoding Nifty with me. This is the series where we analyze and decode Nifty on multiple time frames and create a trade plan so that we can trade the following day with much more confidence and clarity. Today's video is going to be important because I'll be speaking about the way I look at the markets or the way I try to find out the market structure which is there. And as you can see, there are multiple ways to look at it. Before today's market, we were looking at market structure or the probable move in a different light. And maybe proceeding ahead, we might be having to look at it from a different light. So be with me, stay there till the end, and we'll see what can be there, right? What can be the learnings from this particular video. First, we'll start with what we had decided for today versus what happened in the markets in today's expiry. Did the hero zero play out or not? And how did we how did I in particular play all those moves? And then we'll cover the plan for tomorrow. Sincere request, in case if you guys like the way I put out the daily Nifty trade plan for you guys, as well as explain key price action principles and concepts that I personally use in my day-to-day trading, please like the video, subscribe to the channel, share it with your trading friends and community, as well as put down anything that you might have to say in the comments box, be it feedback, be it criticism. I am open to both. On that note, we'll start with today's video. Right. So yesterday, what we had planned was that we will be going long above this high, and we had planned a short entry below this particular low. The market opened with a gap up. I was not following them or tracking the market right at the open, but the market opened with a gap up. Just a second, guys. Yeah, markets opened with a gap up, immediately came down into a selling mode. Now we had planned for a long above this high or a selling around these levels. Now market did not give us either. Neither did market. Say for example, after coming down around here, if market would have retested these levels, formed a double top around here, we could have sorted the markets right around here. But market did not give us those trades. What market gave us was it came down around here, a retest of this particular trend line once again, gave a small bounce and then gave a convincing close around the level below which we were planning a short entry, right? Now, we can consider this as a very good close because this was a bearish candle, not only closing below today's low or the day's low, but also below yesterday's low. And all we needed was a pullback to short the market, which came in uh, around these two or three candles which were there. And the entry was in this particular candle with the SL above this. Markets gave again a small pullback, again fell sharply. Now the SL had to be shifted from this swing to this swing. Mar Sorry for that. Yeah. Markets gave a swing up again, gave a new low. The swing shifted from this to the stop loss, sorry, shifted from this particular swing to this particular swing. Now, around here is where I decided to create an exit plan because of the RSI divergence. So if you can see around this low, the RSI was here, but around this low, the RSI was around here. There were minor divergences being seen around here as well, but those were something that could have been ignored considering the first preference that we give is the price action, and we had given a strong bearish candle closing below the day's low as well as previous day low, as well as very near to the zone that we were looking for shorting the markets. And this is where we had planned to exit the market. And I exited somewhere around this candle, right? And post that again, market created a new low, but then again, there was a positive RSI divergence, meaning we were not planning to go for any further shorts. Or in case you were still in the trade, this was your cue to get out, right? I hope you guys are following because I have spoken about how RSI helps you in not just finding the right trades, but also in case if you are in a trade in a direction to get out of those trades as well. Now, based on RSI positive divergence, this was a trade which could have been taken around here, double bottom. And this was the trade on the long side, which could have been taken, but I did not participate in this trade because I actually wait for the market structure to change. So in case if you would be seeing that, okay, the market structure around here, I'll just draw it quickly for you guys. Else to be stopping around here because this is what we need. Till around this point, the market structure on an intraday basis was of a lower high, lower low. So even if RSI is giving me a positive divergence, then the market has to turn by forming a base around here. I will still be waiting for the market structure to change, which changed around here with a new high which was being created, a new low was created, and in case if we are to change, this high needed to be taken out, which was not taken out till around this point of time. And again, we were in a on a smaller time frame, we were again in a kind of a pole and flag thing again happening, and the higher high, higher low was again created. So that was the reason I did not enter this particular long. But anybody who could have, this is a tradable trade. People do take trade on it RSI confirmation, whereas price action is forming a double high. It is crossing this particular high. So people who would have shorted around here, or people who would have shorted around this break of this particular low, and they have their SLs around here. So this is the trap trading concept basically, because the low was breached and immediately it got reversed into. But I do not trade this particular setup until and unless the market structure gives me a confirmation, because I follow market structure. The first preference is always given to market structure, and that was the reason I did not trade this particular trade. But nonetheless, it was a good trade on the upside as well. Now, around here again, if you can see, the hero zero trade that I talk about post 2 p.m. So from the starting of the day, the PCR today was very negative. It was around zero point 0.6, and the PCR around the highest call writing was around 25,500 levels. I have, as have spoken about it in the previous videos, I track the open interest and open interest change in open interest only on the expiry days for a trade post 2 p.m., which can be taken based on who is getting trapped or which side's SL is getting triggered, right? In case if somebody has is not aware of this particular setup, I had posted the last month's the June month's the monthly expiry setup special, the video that I put up. You can go and look watch that video again. You will the entire setup is explained around there. But as the market shifted down, the OI interest also kept on changing, and at one point of time, there was a huge OI at 25,400 levels, right? On both the call side as well as the put side. Now, market today tracked both the sides, right? If you can see, market here first moved back above 400 mark immediately, and which led to the stop loss trigger for many people who had shorted 25,400 calls. Immediately, market also kind of reversed, went into sideways, and then once this move came in, people who had shorted puts also increased. The put writing had increased, and then markets broke this particular low and trapped all the people who had shorted puts. So today there was the move which I speak about had come on both the sides, but I only played it on the short side because the overall trend for the day kind of looked very, very bleak. It was not very uh, encouraging to say the least. And that was the reason I did not participate in this particular move. And if you can see, this particular move was just a one candle wonder with not even giving a or not even letting the market give us a closing above this particular zone. It went up, took a rejection, and this is where I entered the short position, and I exited it with a good 40 points in premium being captured on a uh, same expiry trade, right? So anybody who is not aware of the expiry trade setup, kindly go and watch the June end monthly expiry video, which is there. On the thumbnail, you will be seeing as monthly expiry special. And you can go and watch that. The entire setup and how I track and how I do that is explained over there. It is simply based on open interest, and it was a very good trade nonetheless. Now, if we have to plan for tomorrow, now this is where I was talking about the uh, price action or the market structure change or the various ways to look at the market is coming into impact right now. So what I was actually planning was a pole and flag kind of a pattern which was happening, and then a breakout above this, and we could have looked at a continuation trade on the upside or the trade that we had been waiting for. But markets have actually broken out of this particular trend channel, and then right now we have kind of established a fake breakout, and we are back inside this particular channel if we speak, right? And this was the zone which was a zone of high consolidation. We have broken down, given a closing below this particular zone of sideways action, which is the consolidation accumulation. You can give it any name. Now, If we are to look at the price action around here, forget the, just give me a second, guys. Forget the pole and flag that I had been speaking about. I'll only be talking about the price action or the market structure right now. After this, I'll just remove the, change the color to, yeah. So, yeah, after this particular high, the market structure has actually been of a lower high and lower low formation only. So if we are to simply look at the market structure, I'm not too good with this epic pen. I'll just be deleting this. Let the other drawings be there. I believe this will suffice the purpose. Right. So if we can still see, market had on a higher time frame on which we had drawn the flag and pole was still in a higher high, sorry, a lower high, lower low formation, right? After this particular high was breached, this particular high was never breached. The lows kept on getting lower, the highs kept on getting lower as well, right? So the market structure is kind of already bearish on here, and this could well have been an orchestrated trap on the higher side, inviting bulls. And right now, what I believe is we might be getting ready to see some lower levels. Now, what can be those levels? That is something we'll discuss again. But I hope the market structure, or this is one way of reading the market, as in this was a sideways flag which is happening along with the pole, and we can look at after a breakout, look for a continuation or the market structure or the lower highs and lower lows, and we are still in that particular market structure. And if we look at the market on a daily time frame, we have kind of a double top around here on a daily time frame, right? So this is something which is that we need to keep our focus on. And for tomorrow, I will ask you guys to either not trade, let the market give a clear direction. The direction is kind of clear, but again, there has been major RSI divergences with each low which has been forming. So even on a 15 minutes time frame, if you can see, this was the new low which was created, and market has not created a new low, although this is an open-ended divergence as of now. There's no divergence on the 75 minutes time frame. No, absolutely not. On a 4 hourly time frame also, again, there is no divergence. But yes, on the lower time frames, there is a divergence, meaning that, okay, even if we have to continue move on the downside, we might see some spikes on the up end. And that is where we need to be careful. We'll be deleting this. We do not need this anymore. This particular zone has also done its job, but this is kind of a support area which is broken now, will act as a resistance, but I don't think we'll be needing this particular zone, right? For tomorrow, if you have to trade, my suggestion would be to avoid trading. We might see a little bit of sideways action because today was a good trending day, and we can see a little bit of sideways action because of the RSI divergence, or which is there on the shorter time frames. So my suggestion would be to for people who are new into trading or do not have a control over the emotions while they are trading, to not trade tomorrow, but to simply observe what is happening in the market. But if you have to trade, the simple plan of action would be this particular low. If this is breached, we are looking for a short trade. I will not be uh, paying a lot of attention to this particular support area that we had drawn, because this has already been tested once and market has taken support from here. But I'm still keeping this on my chart because we can look at some positive price action around here in case if the higher time frame still has to confirm or the market takes support from these levels. But I will not be actively looking at any long trades until and unless Let's also use fib from today's day high till today's day low. Okay, so this particular pin bar high which is there is also the 0.5% retracement. So let us simply mark the zero point 0.5 instead of the entire zone. We'll simply be using zero point 0.5, and any move above this can be traded for a short-term pullback. Then below this we are short, above this we are long, and in between this range, because there was already a lot of trapping around here, that was an expiry move, no doubt about that. But still, avoid trading in this particular zone. Wait for market to give us a clear move on the either side, and then we can enter the trades. And again, a word of caution: anybody trading tomorrow, do it with lower quantities, with strict SS, and if once you get a position in profit, make sure to trail tight. And yeah, that's it from my side for today. I hope you guys have a good trading day tomorrow. In case if you traded today's expiry, put it down in the comments. How was today's expiry for you? What trades did you take, and how was it overall, the experience of expiry trading? Expiry trading is exciting compared to general trading because of the moves, and there are multiple other factors that you can uh, add onto the layer and refine your trading or find out a couple of more new setups, just like the open interest setup that I use only on the expiry days. I'll try to make a detailed video on the same. Uh, I'll need to plan it, I'll need to record it in parts, and then maybe edit the video into one longer period, because those are the videos that I will be need to record in live markets. So maybe in couple of weeks I'll record a video on the expiry setup and I'll put it down across on the channel. But till then, you can go and watch the last monthly expiry of June video, which was there, and you'll get a decent idea about it. And also, you go and watch the video on psychology or the trade psychology, which is exactly what matters while taking the trades. And that will benefit you a lot on identifying the general traps which are there and how to overcome them, right? So, yeah, that's it from me for today. This is your Nifty Guy signing off. Have a good evening. Cheers, and thank you so much for tuning in, guys.